It's Gil here. It looks like we got a nice crowd. I was surprised. I thought we might get nobody about 2 or 3 days before the new year, but looks like some of you steadfast VOSI webinoids just can't get enough of it. Especially given all the exciting action over the past week. You can see I have the NASDAQ Composite daily chart right here. So basically, all that's going on here is what Technical Analysis 101 would call a triangle. So, again, it's like a 5-year-old coloring book, connect the dots. And you get this pennant or triangle, whatever you want to call it, thingy. And you see it tried to break out on, what is that, Monday or Tuesday? No, actually Tuesday. And then yesterday reversed. Volume picks up, but overall it's light holiday volume. So very inconclusive action. On Tuesday, we went to a cash signal on the model. And of course, as we know, whenever we hit the fail-safe, the market reverses to the downside if we go from a sell signal to cash, and of course vice versa if we have a buy signal going back to cash. So it's been that kind of a market, and it does that sort of has its way with the model that way. But net depending on how you're playing, and we've talked about keeping your risk low. We had a 10% position in the SQQQ. We've talked about that before. That's the only position we took on the buy signal a few days ago, or the sell signal rather, and we got stopped out. We were using the IWM as our reference for fail-safe at 74.80 on the IWM. That got hit 3 days ago. Bingo, we're gone. So end of story. Looks like for us, at least, I hope you guys had a reasonable year. But despite all the swings back and forth, it looks like we'll end up about 30% for 2011. And that's using the model, the market direction model. At times, I think at one point during the year, we were down 10% or so. And at one point during the year, we were up about 50% or more, I believe. But it's been a volatile year. There have been a lot of false signals. But we're able to catch enough good signals with the model to make about 30% in 2011. And I think in a year like this, that's pretty damn good, so we'll take it. Anyways, you can see where the market is. Nothing conclusive. Are we going to test the lower boundary? Are we going to break out? Who knows? We'll see what happens. But one of the things that bothers us a little bit right now, and I should mention that Dr. K is in St. Bartholomew, just a few miles southeast of San Martin, in the Caribbean. I sent him on a business trip, and he's there right now, and he's actually, let's see, going from his last email that he's able to send from his iPhone. It looks like he's being rushed back to his hotel, and hopefully will be joining us in about 10 minutes. Anyways, okay, so the action in gold is a little bit disturbing because if the Europeans are printing and the Fed is backing them up by providing low-cost dollar swaps to foreign banks, why has gold been tanking? I mean, gold's actually been tanking with the euro, and you might think with Europe in crisis that people would be getting out of the euro and going into gold, but that's not the case. So we're wondering what that is telling you about the traction of QE at this phase of overall operations using quantitative easing to solve these debt problems that have lingered on since 2008. So at some point, when does the irresistible force of QE run into this immovable object, which basically is this huge pile of debt that just keeps getting bigger? At what point does that just get too big? And it becomes the immovable object stopping the irresistible force of QE. Maybe gold is a clue in this regard, but remember the last time that we saw gold break the 200-day moving average, which is what it did a couple of weeks ago, that was August of 2008, and stocks busted apart a little over a month ago. So I just want to make sure, can everybody hear me okay? Everybody see the screen fine? Just type in yes. Okay, very good. Just making sure. You're a quiet bunch today. You guys must be bored to tears like me. So everybody's half asleep. But you can see what's going on here. Gold is below the 200-day moving average. It's sitting on top of this base from which it broke out of back in July. And remember, we went on a buy signal and cut some of this move, and it worked out pretty well. Topped here, and now breaking the 200-day moving average. So the last time gold did this was August 2008, and it presaged a breakdown in stocks about a month or so later. So it'll be interesting to see what gold is telling us right now. But the thing is, you are right on top of this area. So I wouldn't be surprised. Let's get rid of all this. I wouldn't be surprised if you saw some kind of a bounce, particularly since you've undercut this low, and you've undercut this low, and you're down on top of this pattern here. So I wouldn't be surprised if you saw a more concerted bounce. But I could see gold going sideways for a period of time before possibly moving a little bit lower. In 2008 through 2009, gold corrected for about a year, year and a half. No, wait, yeah, it's about a year and a half before coming out, and it corrected over 30%. So we're only about currently we're only about 19% off the peak. So you get another 10% of downside. That's 150 points from here. So I would say if gold got down to 1,400 or lower, for those of you looking to buy physical gold, which I own physical gold as a hedge against fiat currencies, I think that would be your point to start looking at picking it up. My view has always been, when you're buying the physical gold, you want to buy it when nobody wants it. When you're playing the ETFs, you're playing for a fast trend to the upside, and that's a different story. So to me, there are two sides to the precious metals trade or investment, as you might call it. As a hedge, number one, against fiat currencies, so some percentage of your overall assets should probably be in physical metals, precious metals, and that should be your hedge against further decline in fiat currencies, assuming the situation doesn't improve, which is always a possibility, but I give that a very small probability. In any case, any trades in gold are off, obviously, but I think if you do get down into this area, you start seeing it correct 30% below 1,400 or so, then I think you can step in and buy some coins or bars or whatever. Silver not looking much different, but much uglier. But you see this kind of low, and you're undercutting this low. I don't know. We'll see what these things do, but they look like they could rally from here. One thing to note is that on a relative basis, we're seeing the S&P acting better than the NASDAQ. You can see the S&P broke out through its triangle pattern last week. I think it was on Friday. And it's roughly been able to hold that breakout. So a little bit better action in the S&P. I think that's because technology stocks have been lagging quite a bit and been getting hit. Today we saw Amazon get tagged earlier in the day, down 5 or 6 points, I think, at one point. But notice how it's also getting a little bit long in the tooth. And I'm not saying necessarily that this is going to rally from here and form a base and break out and go to new highs, but on the downside, you've come down pretty good, down from around 245, 246 in here, all the way down below 170. So just figure that's almost 30-something%. So you've come down in 3 waves of selling to the downside. And if you look at it on a weekly chart, you can see how this, here's 1 wave, 2 waves, and here's the 3rd wave. And this 3rd wave is taking you underneath all of these lows here and down into this structure, deep into this structure. So you're getting a little bit of supporting action. Notice how you close up off about a little higher than midway here and definitely higher than midway here. Not quite midway here, but close. And so you're seeing a little bit of support down here, and because this is getting a little obvious. So I'm thinking you could see Amazon get into this position where it's rolling for a while. So my thinking is, if the idea that gold breaking the 200-day moving average means that stocks are going to be moving lower in the next month or so, then it would make sense to see some of these things track sideways for a while before continuing lower, if indeed that's the case. So we talked about today in the short sale setups, CRM. What I'm looking at here is this is an incredibly weak stock right now. And the thing just gets hammered. I think after you've come down, straight down like this off the peak at the 50-day moving average, this is really where you have to be testing the short side on this if you want to make money on a price break. That seems to be how most of these work. But you can see that when they come into resistance, it's not so easy, and you have to be very persistent in continuously either putting out the short and sitting with it, as long as you're not stopped out, or coming in and testing it every day, in waiting to see if it's going to break down without you getting stopped out first. And so in most cases, you're able to campaign it over a series of several days, and then when it breaks, you come down for several days. It gets very obvious, and when you have a gap at the end of a sharp move to the downside, a lot of times that can be an exhaustion gap, especially on huge volume. So I would look at this as a downside exhaustion gap, but what it's done now is it's filling this gap. The low here, which would be the top of the gap, is 102.35, I believe, and you close at 102.19, so you're pretty much right there. We talk about using 102 stop, but you know, that's if you're real paranoid, just want to keep it real tight. You notice you're right at the 10-day. I think you could probably use 105, which is just a 5% stop or less from here. But you notice you're not getting as much buying volume. Of course, it is, you know, going into the end of the year, but still, it's a wedging kind of move after this exhaustion gap, which you might expect a little more upside authority in the move. So I think you have a kind of a tight reference here in terms of trying to put a short out here and see if it isn't able to get up to this area. If it is, you're just gone. So the other one, actually, that you're able to scalp a couple of bucks on these today is Baidu. But notice how Baidu picked up volume increase today. It closed mid-range though, just because you're kind of in a nondescript market. But you'll notice that what's occurring now is you're getting resistance up in this area, which coincides with these lows. So it's about 118, 120. And it could go lower because if you look at Baidu on a weekly chart, this is big head and shoulders. This is the right side of the head. I don't count this really as a head because this is really the authoritative breakdown on the right side. So it's this big, ugly head and shoulders. Here's the right shoulder. You picked up volume 3 weeks ago, and now you're kind of tracking sideways, so it's a bit of a reverse flag. And if you're playing this, looking for it to break out to the downside, then obviously the place that you're going to come and try and ping it on the short side, testing a short position, is going to be about 118, 120, and then use that plus X% as your stop. A lot of times I'll create a mental stop and give myself 2% just because I'm not always so perfect. So if I'm using, for example, I mean, the process isn't really all that perfect. There are no magic stops that every time they're hits, the thing is definitely going to go higher. And if they're not hit, you know, I mean, it doesn't necessarily mean something's going to work. But 102, you know, we said you could use a stop there, but you could use 102 plus 2%, so you go to 103. 102 plus, you know, 4% if you wanted to do that, depending on where your entry point was. So you can do whatever you want in terms of stops. The whole idea is you just have to have a point that's going to tell you to get the heck out of the way. And if you're able to short and work into these rallies when they occur, and you catch the move, that's usually very profitable. So also CRM on its pattern, you can see it undercut these lows. But you've got a lot of overhead up here between 100 and 110, so I wouldn't imagine that's going to be able to muster up much of a rally here at this point. So I'd look for it possibly to move lower down towards 90. So we'll just see how that one goes. Another one to keep an eye on is Fossil, which has been in this big, I wouldn't call this a head and shoulders. I mean, you could say this is a left shoulder, kind of, and then here's your big, ugly head, and here's a couple of right shoulders. And now you're kind of creating this reverse cup and handle pattern, and you see the thing trying to rally up into the 10-week moving average or the 50-day, and not being able to get through there. So I'm actually looking for this thing to break out to the downside. I think if it did break 80, you could probably short it and catch a move down towards 70. Or you can try and bump into it or you know, ping it by putting position out into any bounce off of the 80 level. Looked like it was going to break today, but it found support off the 80 level, so it is still finding support at that level. So you did pick up a little bit of volume today, and it came off the lows, so maybe it does try to bounce again. But depending on what the general market does, these things can just bounce along you for a period of time and then finally break. And the thing is to try and be there when that happens. Whether you're going to be successful or not is another story. So Apple, we're kind of watching Apple. I'm just interested to see if it was to bust the 400-day and start coming down with volume. I would guess it's headed for not the 400-day, the 400 price level here. My guess would be if it busted that, you'd see it head for the 50-day. And it is still a late-stage base. You're getting very little buying interest, but The news has been pretty good for Apple lately because they're talking about the ITV, and that's been getting some press as well. But this is a late stage pattern. If you're looking at it as a weekly chart, then you're seeing a cup with a handle. You got a low handle, 1 week handle. That's not really a constructive base. So, but Apple's very popular institutional holding. It's selling at 11 times forward estimates, which I consider to be a serious problem. Because why is the technology or the consumer technology juggernaut of the new millennium, Apple, why is that company selling at 11 times forward estimates? Why does the market place so little value on its forward earnings stream? I just want to know that one. Maybe we'll find out eventually. All right, let's go through some, I'm just going to look at some long situations before we get to some questions. Tomorrow I'm going on Fox at 10 o'clock Pacific to talk, I think, with Chris Cotter and Lori Rothman. I haven't talked to them for a while. And they wanted me to talk about some areas of the market I like if things improve. My view is the medical stocks look pretty decent right now. Intuitive Surgical is one that we've pointed out on Pocket Pivots, I believe, in here. And it's just kind of slowly moving its way higher. But the one thing I like about Intuitive Surgical is that it's come out of this 18-month plus base. This is a weekly chart, so it's really just starting a move, and this might be considered its second base, and so you're really just starting to come out of this. And I think this is constructive for the stock because it hasn't been played, unlike other names that have been overplayed, and it's just starting to come out. So it looks okay. Yeah, that's one I like. Biogen, you're going to note here on the weekly chart, very tight action here. Assuming it holds up, this looks pretty interesting, but it's not popping up yet. Maybe that doesn't happen until they come out with earnings, I think, later in the month or next month. But you'll notice getting very tight. You're in a 1, 2, 3, 4, 5, 6, 7, 8, 9 week base, and just hanging in there. So it looks okay there. If you look at the daily chart, you notice you get some pocket pivots right in here. Here's one. Today you had volume up. It's just kind of skittering along the 110 level, and it's very tight. Now, I wouldn't be so concerned about it being under the 50-day. A lot of stocks will base for a while, and then the 50-day catches up, so it's very easy for them to just flip back and forth between the 50-day. I'm usually more concerned about a break that takes you way down below the 50-day and doesn't recover, like this one did. So this is just kind of drifting. The 50 days catching up, but it's very tight and looks okay. The other one we like and we talked about was Salix Pharmaceuticals, going very tight. Here's a viable gap up, also a pocket pivot, and it's holding in very tight. So that actually looks pretty good. We also pointed out Alexion, and somebody asked a question, you know, what do I do when there's a pocket pivot and the model is on cash signal? Well, my advice would be to take the market as a market of stocks, not as a stock market. So I think you can try things long and short. My success has been mostly on the short side, and just in a few stocks that I've been campaigning on the short side. Netflix and Green Mountain were very nice plays earlier in the year, and I think on the long side there are some things that have worked. Like you could have owned Intuitive Surgical and just kind of sit with it and let it slowly move higher. It's acting okay. But Alexion actually broke out of a base on a pocket pivot and pulled back today on top of the base, and the breakout point found support. So it's still acting okay. So I would expect this one should hold the lows of these 2 days. If it doesn't, falls back into the base and you bought this, probably would just dump it. That's what I would do. Now, Dr. K would probably handle it lower, differently rather, and he'd probably sell it a little bit lower, giving it a little bit more room, but he wouldn't have as heavy a position as I would. So, you know, it's just a matter of personal preference in terms of the position that you're taking, as well as the size of your position. So, and where you bought it. So, and how aggressive you want to be. So, somebody asking CRM, what would be the downside target on this? I would look for 90 initially. So you've already come down a ways, but what I think is going on here is this is just a flag that's consolidating this move, and if this was an exhaustion gap, you would expect more thrust off the lows, and you really haven't gotten it. So to me, it looks weak. Now, I could be wrong, but I've got a nice reference point in terms of using a stop right in this area. If it's able to get up through there, it may not may not be playable right now. It may take more time, but eventually I'd like to see it get down to, if we're looking at a weekly chart, I think you get down into this area in here, so somewhere below 90 or so. So not, so if you were shorting it, I've been working this one for a long time, so I've been taking money out of it on these different breaks and then coming after it again. Then you got to sit through 4 or 5 days of putting it out and watching it either start to go down and then rally or just sputter about before it goes over the falls again. And a lot of times that's just a matter of being able to put up with it. So if you can put up with it and you're just manic about coming after it and campaigning it on the short side, then I think you can do it. But that would be the downside target. Do you recall a market time period that gapped pre-market up and down as much as this past year? No, and actually, Dr. K, we had a gap the other day, and he called me, or he actually instant messaged me and said, it's official, this is the most volatile market I've ever seen based on the gap up. So, yeah, it's crazy, but again, why is that? It's because the market is hinging on news. And the news that the Europeans are going to start printing money or not, how much, has really caused a lot of those gaps. And it may continue. You may have this craziness. But I would like to know why, if the European Central Bank is now signaled that they're ready to print, and they are loaning 489.2 billion euros to 523 banks, which interestingly did not keep the money with themselves. They actually turned around and deposited it right back with the ECB. You got to wonder why. The other phenomenon we've noticed this year is that foreign banks have been increasing their deposits of dollars at the Fed. So everybody seems to be afraid to keep their money either at other banks or even with themselves. They're seeking to place it, the very money that they borrow from the ECB, they turn around and they put it with the ECB. So what's going on? Anyways, breakout volume is low in iSurge. Is it not a concern? It's only a concern if it fails, because a lot of times you'll see stocks break out on light volume and then just continue higher, and you see the volume come in. But the bottom line is, if you're buying a pocket pivot, such as, for example, this day here, which I think we pointed out, and you're using, as your guide, what are you using as your stop? You could use a 10-day, you could use a 50-day, but we know that since iSurge tends to hold the 50-day, that's what you would want to be using as your stop. And you notice it does hold the 50-day. But that's why you're better off using pocket pivots and worrying about whether you got a breakout that's got volume or not. And there's very little selling volume here. Dr. K, you on yet? I think I hear somebody in the background. Guess not. Your opinion on potential shorts HLF and BJRL? I don't know. I just tell you that they're not really hitting my short sale screens. Herbalife. I don't know. I can't really tell you what that pattern is. So what would you do? You short it and use the 200-day as your stop. Not rocket science. Can I tell you that it's going down? No, I don't have a crystal ball. I think Dr. Hay is trying to get on. He seems there's something back there. It's very, very faint. It must be an internet service on those little tiny islands out there. What was that other thorn? Oh, BJRI. See, you can see how much I know about that. Dr. K, you there? Dr. K, you there? I hear somebody. Can anybody hear that? Just barely. This looks the same way. It's just under the 200-day moving average. So, if you want to short it, use the 200-day as your stop. But what is this? Looks like it could be like a pod, but I'd rather short it up here because you're on top of this structure here, and maybe it just tries to bounce up here. It doesn't really look all that right to me, so as a short. But it doesn't mean you can't short them and just use a 200-day as a stop. If possible, for nostalgia, could you comment on MCP? I have actually played with this one on the short side. I think I hit some around here and got a few bucks out of it. It came down to this level and undercut and then rallied. It looks like it's going lower. So pretty ugly, but who knows? Maybe this is a low and it's going to bounce and make a base, but I'm not going to play with it now. But interesting how, what is once hot is no longer hot. And this is an interesting pattern in that it looks like a big ugly head and shoulders. You get the right shoulder, however, is higher than the left shoulder, so it's not your classic pattern. I would probably call this more of a late stage pod that broke down because you never saw any tightness in here at all. Notice how loose this is all the way. It tries to get tight here, but that's just before it blows to pieces. So I actually did not start playing with it on the short side until here. I think Dr. K is trying to connect, but like I said, the internet service on those little tiny islands out there is not so great. I'm not sure why people ask me if CME is a short setup. I'm not sure where this one's coming from because this. Let me look. Let me just kind of push this down. So, for those of you who read the book I wrote with Bill O'Neill, How to Make Money Selling Stocks Short, the first rule of short selling is that you want to go after the leaders from the immediately prior bull cycle. Now, you tell me, has this been a leader from the immediately prior bull cycle? Where's the big run? There's no big run. So this thing just at the lows of this big ugly consolidation. It has no real, this is not a head and shoulders because this is coming at the end of a downtrend. You want to see head and shoulders at the end of an uptrend. So whoever's asking about this one, you need to get this out of your head because this is so far away from something I would short, it's not even funny. Seriously. Stocks that you want to short, patterns you want to short, this is what you want to short. See that? There's Crocs, the poster child for short selling patterns. A stock that's a big leader has a big run, breaks down. Here's your shoulder, your head, and then your right shoulders, and it's death for the stock from that point on. Green Mountain Coffee, the same thing. You had a very narrow head and shoulders. Stock had a big run first. You form the head and shoulders. Boom, you blow to pieces. Okay, now I want everybody watching this, you tell me, okay, here's Netflix. Left shoulder, your head, your right shoulder. After a big move, boom, you blow to pieces. Okay, now everybody watching this very carefully, here comes CME. Oh, that looks like exactly what we're looking for. So I'm sorry to rag on you, but I think that I don't know. That's a fun. You're asking if it's a short based on MF Global. Why? I mean, now you're getting into something that's entirely outside the realm of our approach to market. We don't need to think through shorts. The patterns are telling you short me, short me. That's what you're looking for. So I would blow CME off. I don't, maybe it goes lower, and if you thought through it and run all the numbers that MF Global maybe is the tip of the iceberg, and it's the end of the world, then go ahead and short it. But it doesn't fit the way I would short stocks. That's all I can say. It doesn't mean it isn't going to go lower. Doesn't mean it isn't going to go higher. It just means it's not something that I would look at. So you have to ask somebody else. Sorry. Let's see. CMG has found the same resistance for months. Any comments? Chipotle Mexican Grill. Well, you all know what I feel about the food. It just kind of sucks. That's my thinking, but a lot of people apparently like it. Here's the daily chart. It's running into resistance, but it's actually making higher highs every time. So it's kind of you might call this an ascending triangle, would be technical analysis 101. So, if it broke out, what's wrong with that? That would be fine. But I wouldn't say that this is resistance and therefore you should be shorting into that. There's really no breakdown pattern here yet. And in fact, it doesn't really seem to want to give up much ground, which I think is pretty interesting because you would think that, oh, this is such an overvalued stock. But cheap food in a lousy economy, and they're expanding with some Asian restaurants to add to their Mexican line. I think it keeps the stock afloat, that's for sure. Definitely not a reason to short it. If it broke out, though, that could be a reason to buy it. Let's see, anything else here? Yeah, I think Dr. K is trying to connect, but I don't think he's got the juice over there on St. Bart's. You get it. I hear ghost voices in the background. Let's see. Any other questions here? Okay, here we go. Gold looks like a short on any bounce using your logic. Well, I mean, you could say so, but gold isn't a stock, so it's really not the same thing. But yeah, this bounce in the 200-day could have been shorted, and that it looks shortable. So, but gold isn't really something I look to short. I did at one time try shorting silver for a couple of days and made a couple of bucks, but on a long-term basis, I tend to think that gold is probably going to end up going higher eventually. It's just going to go through a correction here, and so far it's 19%. I don't know if that's it, but as we talked about, you know, it's on the weekly chart. You can see that it's on top of this structure now, and you come down one, really two waves of selling. So maybe you get a bounce and then another wave of selling, and that's going to complete the correction. But you know, I don't know. This could have been considered shortable too, like a late stage failed base. That's possible. Yeah, if you're using those types of patterns, sure. And if you did it on that basis and you're successful, then I think that's a good trade. Q-Core is holding the 10-week moving average, so it's in a 3-week pattern here. So you made a new high here, and you're just correcting. Stocks had a big move already, so that's one of the issues I might have with it. I tend to like this SLXP, Salix Pharmaceuticals, because it's just coming out of this long base, so, and it's holding up okay. FXC, the euro, you know, like I was talking about earlier, the euro just continues to make new lows. Today I tried to find a bottom, kind of like gold, but if you look at it, it looks exactly like gold. So people are dumping euros and they're dumping gold, and they're going into the dollar, or at least they have been. Today they said to pull out a little bit. The dollar's got resistance up here. We'll see if that ever breaks out through there. If it does, that might not be good for stocks or gold on a continuing basis. So. When you look at fundamentals on the long side, what are some of the key things to look for? Well, it's the same thing that O'Neill would look for. Strong accelerating earnings growth, sales growth, high return on equity, all those sorts of things. It's not so much you know, what those exact numbers are. A lot of times there's a lot of conceptual thinking behind it. I heard you say the other day that you yourself need to correct your psychology to improve your results. Well, I think it's mostly just to understand when your psychology is getting into a, you know, off kilter, and where you're getting into a position where you're afraid to take losses and allow yourself to be wrong, because, and that's really what I was talking about, that most people don't have the psychology to invest in the stock market. You know, we see it when we change the signal. We put out a sell signal, you know, and a few days later we get stopped out, and if you take a position, you may lose 2 or 3%. If that happens 3 or 4 times, then you're going to be down 10%. That's not a lot of money, but you know, you get a couple of emails, and thankfully it's only a couple of emails from psychotic people who are emailing that, oh, you suck, and I never lost so much money in my life. And I'm thinking, you probably haven't been investing very long in that case, if you're screaming about a few percent. But the displacement of, you know, the model gives a signal it gives, and we take a position ourselves based on the signal. It's not like we're shorting and buy signals on the model or going long on the sell signals. We're going with the signals as well. And I do hear Dr. K's voice trying to come in, but I think they're just trying to get something set up out there, wherever he is. But anyway, so we get a signal, and you know, we lost a couple of percent on that as well. But it's interesting, if people email you and start, you know, calling you names and saying they're going to go blog about you, tell you how awful you are, as if there's something that you did to them. So what they're doing is they're displacing the blame for the trade. If you choose to use the market direction model to guide your buy and sell and go to cash signals, and you choose a particular position based on your risk preferences and what you know you can lose based on where the stop-out point is, or the fail-safe, then you made that decision. And when it doesn't work out, if you have to scream at somebody else, then you have a problem. You know, they say in Asian cultures, screaming and yelling at somebody, so like the way people like to act in the United States, if they go to a hotel and they don't get great service, they want to scream at whoever and make a big scene. In Asian cultures, they say that says more about you than it says about the person you're screaming at. And I think that's the case when it comes to investing. Take responsibility for your decisions, and allow for yourself the fact that you're going to be wrong some of the time. If you get your psychology into a tizzy that I can never be wrong, and when I am, I'm going to blame somebody else, then you shouldn't be investing. And I've had periods where just psychology in different ways is off kilter, where you can't make decisions because you've decided that the market is no longer going to act the same way because of all the bizarre things going on in the black swan environment. And you start to create a lot of ghosts and bogeymen in your head. And I think that's another. There's all sorts of aspects to psychology where you mess up your decision making, but you really just have to be able to make decisions based on, number one, risk tolerance and the objective of the trade, and number two, having a clear stop out point if you're wrong. And then the other part of that is when you are wrong, you're always using the information that you pick up from being wrong to help guide your future decisions. So you can be wrong 3 out of 4 times, sometimes even more than that, and still make a fortune. That's what people don't understand about the market. So they don't allow themselves to be wrong, or they don't allow for the fact that whatever system they're using was going to have periods where it doesn't work so well, you know. And we were able to hammer out 30% gain in 2011, but at one point we were up over 50%. At one point we were down 10%. So we were really all over the place, but it was rough, but we stuck with the model. And there were times when we would sit there thinking we're nuts for going with this signal or that signal, but sometimes we were nuts for not going with it. And it doesn't pay to second guess the model. But again, when you lose money on the trade, and if you take 4 or 5 model signals, and number one, you made the decision to follow the model. The model gives its signals objectively, and you follow them if you're going to follow the model, as we do. But if you lose money doing so, that's just part of the game. And it's nobody's fault, really. If you want to assign fault, it's your own, but it's really not something to look at in terms of whose fault it is. The market tells you made 4 decisions and 3 were wrong. Okay, 1 was right. You hopefully held that one and made a lot of money there. That's what we did in 2011. We made most of our money in, well, I'll show you. Silver, and it was basically playing this move, boom, and that was it, and that did it pretty much for us for the year, and that's all you need. So a lot of other, when we look back at our trading, and actually in the new book that we're writing, in one of the chapters we do a post-analysis of our trading in 2011, and it shows that you can make a lot of mistakes, but if you're able to handle those 1 or 2 correct decisions very well, you make a lot of money, or at least have a decent year in what's otherwise a really crummy environment like we've had in 2011. So, and as a trader, you're going to find that initially you learn the basics and you learn what a base is and a breakout and when do you buy, when do you add, when do you sell, and all these other basic things. But as you get better and better, you're going to find that what really becomes the critical aspect is your psychology, and your psychology can do a lot of strange things as you get more experience. I'll give you an example. In the 90s, I made a lot of money in the market in the 90s, but a lot of older guys I knew didn't make a lot of money in the 90s, and they definitely did not make money in 1999 because they were conditioned to not believe those types of crazy moves. Everything was always overdone in their mind, and the market was ready to top in March of 1999. And in fact, there is a newsletter writer out there, and I think it's hilarious. The guy claims credit for calling the market top of March 2000. He called it in March of 1999, and he was right. He was proven right. Personally, I think the guy's an idiot because it means he missed the entire move in late 1999, where I made 1,000% that year. So I'm glad the market topped in March of 99, and this guy was brilliant for calling it. But the point is, you've got to allow yourself to be wrong, and then take that information and turn it into useful. Okay, somebody's. Let me ask a question here about SLXP. I think this is a pretty good question. Let me read this here. Isn't SLXP base too deep with a nasty gap down, or did the recent action correct this? I'm not really going to worry too much about what it did before. There's this nasty break in here. Then you have this weird movement here, but this thing is gapped out, and now it's starting to move. So all I need to know is as long as it holds this gap up, it's fine. I don't need to worry about what it did before. So I really wouldn't pay much attention to it. A lot of patterns you can have these. You get 1, 2, and 3 big ways of selling. It just undercuts everything, cleans the whole thing out, and now here it comes. So it's acting okay. And the beauty here is that if you're on this one, here's your stop. It's the low of this day. So that's it. You don't have to worry about anything else. If you own the position here and you have 20 cents profit on it and you're trying to take it because you're worried that it's going to pull back because there's some gap in the pattern before, well, then you shouldn't have probably bought it in the first place. GNC, let's see here. I don't like getting Dr. K in here. GNC, cheap vitamin company. I don't know. It's acting okay, just holding up. Not something that gets me excited though. Ed Secoda's Trading Tribe. Yeah, in fact, Dr. K is a big advocate of the Trading Tribe. Are there any trading psychology books you might recommend? There's a number of them. I like Dr. Elder's books because he deals with a lot of that, and we'll be dealing with it in our book, the next book that we're writing, which is follow-up to Trade Like an Unlimited Cycle. Somebody's mentioning maybe fossil ready to break. Well, looking for that breakout on fossil, we're looking for that breakout through the 80 level, which would take you through the lows of this here and probably set up a test of the 70 lows. So it doesn't look like we're going to get Dr. K. I think he's trying to get on, but all I hear are strange ghost voices from one of those programs you run across on the Discovery Channel. I love those programs. I think it's all made up, frankly. Is it beneficial to use IBD stocks on the move over time to find good shorts? I know. Well, only in the sense that you're using, if you're looking for short ideas, you're just using the leaders from the prior bull cycle. That's all. So, that's Netflix, Fossil, Green Mountain Coffee. We've gone after CRM, and these are former leaders from the prior cycle. There he is, Dr. K. Can you hear me?
Can you hear me? Can you hear me now?
We hear you, yes.
Can you hear me now? Yeah, I can hear you fine. You're coming in fine.
We hear you just fine, then.
Okay, great.
Oh, that's great.
That was a bit of troubleshooting. Actually, the internet's fine, but it's somehow the Wi-Fi, I think, here jogged my speakers a bit. So I had to just play with the settings, and now it looks all good. The island actually has a lot of traffic at 6 p.m., but I guess that goes to show you that islands are no different than mainland in terms of rush hour traffic.
Yeah, well, that's good. Well, I hope you're enjoying yourself. Just so you know, Dr. K is on business. I sent him on a business trip to St. Martin's because I didn't want to go.
Yeah, you sent me on a business trip. I like that. I think I had to send myself. And now I got to tell you that after this stay on the island, I'm going to really need a vacation because it's funny. It's actually a bit stressful, but I am having fun. All of that said, it's good stuff.
That's good. Dr. K is on a mission to raise capital for our new offshore fund that we're hoping to launch next year. So, anyways.
Yeah, actually, a lot of people here are, of course, on holiday, but it looks like a lot of the meetings are going to take place on mainland, mainly in London and possibly over in Playa del Rey, because there's a couple people coming your direction, and they'd be more than happy to meet.
Okay,
so that's all good.
Okay, we can talk about that later, but right now we're on a live webinar. You know that. Dr. K, let's throw this question at you. What are your expectations for the markets for the first quarter in this coming election year?
Well, it all depends on what happens with. Well, there's a couple major factors. The first thing is QE. I think there's going to be potential foot dragging on the part of the ECB, even though there's indication that they're going to be printing, and there's indication that central banks will be printing. But I think that gold, the price of gold, is telegraphing to us that this money printing is going to be delayed, and I think we might see a drop in the markets before the ECB cries uncle and finally starts to print in earnest. And at that point, I think the Fed will also follow suit. So we'll probably get maybe some form of QE3 in the works. And that potentially could mark the market bottom, which may occur within I'd say the first half of 2012. And that also sets up nicely for the election period later in the year.
Yeah, that's kind of the scenario we're looking at. We actually just wrote a Market Watch article which kind of details that view. And I'm not sure, when is that article coming out? I think we turned it in today, and so they'll probably print it in the next couple, 3 days.
Yeah.
Kind of details that view, but you guys already pretty much know that. I mean, we think that a good scenario here would be gold is presaging a break in the market, okay? And that's going to come down and create a new leg down, and here's the first leg down over here, and you've got all this chop, 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 and then you break down again to new lows. And then that creates a bottom sometime in the spring, maybe the summer, or some other time in between there, where the market begins to discount the potential for new economic policies coming out of Washington after January 2013. Now, a lot of that is going to depend on exactly who's elected and what the lay of the land is in Congress. But I think if the market begins to sense that there's going to be, say, an inflection point in policy, which, right now you got the Fed easing like mad, You get the Europeans starting to ease, but the problem is the economic policies are not there to give that any traction. So maybe if you got some of that after we made a market bottom, got everybody shaken out of this market, you could start going again. So, anyways, Dr. K, are there any long stocks that you like right now since we got you here?
None. That's my short answer. None. I'm not seeing anything that's set up and ready to go. I mean, there are a couple names obviously that have shown a lot of strength in this very choppy environment we're in, and they very well could be the next to break out when they can find a trend. And we pointed some of these stocks out in our pocket pivot reports.
Right.
So I would continue to monitor those. Like Hands is obviously one of the obvious ones. There's a few, but there's not very many. But I basically on our alert screen we price bracket these top performing stocks so that when they hit the upside price target, then we can have a look and see if they're closer to being ready to go. And of course, we're always running a pocket pivot screen, so that also keeps us. Lets us keep tabs on potential leading stocks in the next upswing, whenever that is.
Yeah, I think you're seeing some stocks hold up. One of the things that we'll always notice, though, if the market is starting to improve, the number of pocket pivots that start to appear even before a follow-through day tends to increase fairly sharply. Don't you think so?
Yeah, absolutely. I mean, there's been so many clues. The beauty of technical analysis, I was telling this one guy today who actually has a great appreciation for fundamentals. But when you marry fundamentals with technicals, it allows you to really get a deep sense of where the market is at in terms of its internal health. When you look at the price volume action shaping up in leading stocks, like they did, for instance, in October of 1998, it's very evident that the market is ready to have a potentially very strong uptrend. And of course, we saw that also in September of 2010, early September. So, and then likewise, in August of this year, August 2nd, the model went to a sell signal. There were very few stocks that looked proper. And the problem right now is I have a number of stocks on my watch list that have been able to buck the current trend over the last few months. And a number of them are medical stocks. They often have that behavior where they kind of do their own thing. But I'm not seeing anything that's just ready and raring to go. If we send a report out on a stock that's pocket pivoting, we always it's always good to position size appropriately because we're still in a very sketchy market environment.
Right. Someone says, I know the model is on a cash signal, but would you recommend buying the dollar and shorting the euro? Not really. I mean, we're not going to make a recommendation either way, so not our thing. We just leave it alone. We're in cash, probably staying that way right now, although I am in my personal accounts trying to mess around the short side and make some money in Baidu, trying to make some money in Salesforce. We'll see what happens, at least on this little bump. Is the market direction model closer to a buy or a sell signal? I think it's about 12.8 centimeters away from a buy signal, but it is 12.2 centimeters away from a sell signal. So I think it's slightly closer to a buy signal. What do you know, Dr. K?
Yeah, that's because we're closer to a full moon, and therefore that applies.
We have no idea. So sorry. Let's see what else. Somebody's asking about Celgene. Celgene is acting okay, and it's trying to come out of this base, and looks like you get some pocket. Here's a pocket pivot type move right here. Wait, no, I'm sorry. No, that's not a pocket pivot. This would have been, but it's under the 50-day, but it's above the 10-day. And a little gap up action there. And here's the weekly chart over here. Let's kind of scrunch this down so we can look at it. Now notice it's trying to come out of this big pattern. But I think what you're seeing in Celgene is very similar to what you're seeing in Amgen. Amgen's broken out, and it's actually stronger than Celgene. But I think this all speaks for the whole medical biotech area, and I think a lot of these stocks are just starting to come out of consolidations. Remember, I talked about Intuitive Surgical coming out of an 18, 19-month consolidation and moving higher, even as this market has been very choppy. And I think you might see them all come on and lead for another cycle when we come out of any kind of correction or this choppy environment that we're on. So somebody asked about LinkedIn. You know, I don't know. I put my profile up on LinkedIn, but I don't really use it for anything. I don't really need to.
I'd be very careful with this. This pattern is showing, you know, it's in a downtrend at best. It's in a choppy base formation. It's not ready to go. If it had a pocket pivot, I wouldn't take it. It's a low quality type of formation right now. So for it to prove itself, it needs to get back up to, you know, toward 100 in a constructive way. And you know, like Gil was saying, you know, as he just said, he's not using LinkedIn. Well, I mean, it's the number one business social networking site. But that said, there's a lot of social networking sites. There's a lot of competition in this space, and I think given that I do use LinkedIn, I don't see the killer app in LinkedIn, so to speak. I mean, their big strength is that they have a huge following, but they are no Facebook, they are no YouTube. And I really have my doubts on the fundamental basis that LinkedIn can have actually a proper base breakout and then double from there. I really would be quite surprised. They would have to do something above and beyond what they're already providing, something that's more along the lines of a killer app within their technology for, I think, the stocks to really have a good run.
Yeah, and you guys all know that I was shorting this actually into this bounce, and I took my profits, and I'm out of it now. Seem to find support right off this low, which is logical. I was hoping it would head for that low. It still may, you know, it still could become shortable in here and break down again, but it's kind of down there, you know, and man, that's ugly. Almost look like it's in no man's land, hey, Dr. K?
Absolutely. I don't see anything. There's nothing here. There's nothing here. It really needs to shape up and then break out, and I would be surprised if it had a proper base formation and then, you know, went on to go up, you know, say 50% from that breakout. I just don't see the fundamentals in place. I think the market is hyped LinkedIn, and there's too much expectation driven into the stock simply because it's a social networking site that happens to be number one in the business world. But so what? I mean, again, it doesn't have the power of Facebook or YouTube.
Yeah. Agreed, and I think the technical action kind of indicates that. Silicon Motion, the technology stock, and I haven't really cared much for technology stocks. I mean, the stocks have been kind of going sideways, but you know, technology is really being hit, and I think that's why you're seeing the S&P 500 leading the Nasdaq right now. But you know, it's up there; it's been holding up, but I don't really care for technology right now. Somebody says you'd be surprised how moon phases affect the behavior of animals. That's actually quite true, and the moon affects quite a bit. When I was a broker, I had a client who would never trade when Mercury was in retrograde. And maybe some of you might be familiar with Arch Crawford, a guy who used to write, I don't know if he still does write it, but he used to write a newsletter based on astrology and the movement of the celestial bodies. You remember that, Dr. K? You remember that guy?
I remember that, and I remember it actually did very well on a performance basis.
Yeah, he did okay. So, you know.
But you know, the argument is that if the oceans, as vast as they are so profoundly affected by the gravitational pull of the moon, then you would think maybe there's rationale behind, you know, behind saying that human beings perhaps are affected by the phase the moon is in. You know, of course, it would be one of many variables, but it would possibly be a variable that could be weighed in.
Yeah. Some of that's on any IPOs we like Tango. I don't know. This one doesn't thrill me. It's kind of a cheap one. You know, IPOs, the higher the price is, the better the quality. So I think that's why you got to watch out for Zynga, because you're going to get zinged on Zynga. Something comes out at $9, $10. You know, I remember Home Depot came out, it was like 15, 16 bucks. It's probably one of the cheapest ones that had a big move. But when you look at IPOs, the higher priced ones tend to be higher quality. But Zynga, what's the other one? Groupon, Group Off, trying to form a cup with them. But I don't know, still, you know, these guys aren't making any money, and they're not going to make any money. And to me, it all looks like dot-com mania all over again in a lot of ways. I'd like to see what happens when we actually get a social media company that makes money. You know, probably the few ones that are out there. Tibco uses social media. But this pattern's kind of in breakdown mode. So, but they've got earnings, but LinkedIn doesn't, and doesn't have much going on, and Groupon doesn't. So I'm not really into those. Let's see, a couple more questions. Anything else? So, I think that's pretty much it, Dr. K. There's just not a lot going on. Hopefully next week there will be something more exciting. So.
Well, next week is the start of the new year, and I think we're going to see. I will be surprised to see some continued movement in the market to continue these high levels of volatility. But perhaps after the start of the year, we're going to see a concerted uptrend or downtrend rather than just chop and slop.
Right. Dr. K, I was just gonna everybody here is I'm bringing up Google Earth here, and you can see. Let's see, St. Martin is up here, so you're right here.
Right. Exactly, I'm about 90 minutes by ferry from St. Martin.
90. So then that's this little island, St. Bartholomew, right here. If you zoom down. Okay, so you're here. Are you near the town of Gustavia?
No. Oh yeah, absolutely. You got it. That's it. In fact, if you zoom in
right now. Okay. And what hotel are you staying at?
Yeah. Yeah, this is great. This is a good representation of the island.
Yeah,
excellent. Yeah, actually, if you go to I'm on the end point.
You mean the end of this little peninsula right here? So, well, that's exciting. Let's see. Well, let's look at some photos down there so we can see what you're looking at here.
What they need is real time. They need real time satellite, so I can wave. And you can actually see me waving right now.
Now, there's quite a few yachts in there. Have you been able to get on anybody's yacht?
Yeah, tonight we're going on to a yacht party, and then the big one is going to be Andromovich, the billionaire Russian. He's got the largest yacht in the world, and I think he's throwing a big New Year's Eve party. But New Year's Eve is going to be crazy on this island, from everything I hear.
Yeah, it's not a very big island. It's pretty small there. Looks pretty neat though.
Yeah, I mean, I've met some listeners might be able to well, I think they'd find it interesting. There's some the Google guys who were here last year. I think they're doing for New Year's Eve. Sergey Brin, Stanford guys, and then there's a lot of I actually met the guy who started up PayPal, and he's just contracted with NASA to revive the space shuttle program through his company SpaceX. He's the founder of SpaceX, also the founder of Tesla. So he's created all these companies that have done very well. He sold PayPal to eBay a few years ago for $1.5 billion. So you get a lot of these guys who are very they're young and they're worth 9 or 10 figures. 10 figures being billionaire status. It's pretty wild because you get a lot of genius types that are very entrepreneurial that have done very well, and then you get the older types here on the island who've already more like the Richard Branson's types who've already well established in business or sometimes trading. Sometimes they're hedge fund managers and whatnot.
Right.
It's an interesting eclectic mix.
Okay. Now I see an airstrip right here. Can I get my jet in there?
Now that airstrip is for choppers. So some people take chopper from St. Martin's, and as far as the jets go to St. Martin's, and then they chopper over to the island or they ferry over.
Okay, so where is the airport in St. Martin's?
That airstrip you see in St. Bart's is for small planes.
Okay, so you would fly into this airport here then?
Yeah, you fly the jet there, and then just ferry over is probably the easiest.
Okay, well, very interesting.
Chopper, you could do the chopper thing too, because the chopper puts you right in the middle of the island.
I see. Well,
take Mocha Zero.
Mocha Zero. Okay, I don't have to take Mocha 3 actually. Anyways, thanks everybody for coming and listening today. I know it's kind of been a slow period and not a heck of a lot going, but you can kind of see what we're looking at here. Tomorrow will probably be a non-eventful day, but who knows? Maybe you'll sell off, or maybe you'll just end up pushing it higher. So, anyways, that's all we got. We'll catch you guys next week. Have a great New Year's, and don't forget, drink responsibly, which I'm not
Lots
sure.
of green tea.
What the heck does that mean, drink responsibly? You know, if you drink, what are you drinking for? To get drunk? And if so, can you get drunk responsibly? I don't know. Too many gray areas here. Can't handle it. All right, you guys. Take care. We'll catch you guys later.
Take care, everybody.